There are some in the investment community who say that compound interest is the eighth wonder of the world, one of those being famous investor Warren Buffett. Mary Buffett, who is Mr. Buffett's daughter-in-law, is a foremost expert in this investment philosophy and has written books on investing, particularly as relates to Warren Buffett's investment philosophy. So it's my pleasure to welcome entrepreneur, author and financial expert Mary Buffett in studio. Thanks very much for joining us, Mary.
I'm so pleased to be here.
Good stuff. I can't believe it's your first time to be in South Africa.
It is, but certainly not my last.
Okay, super. So essentially, what is the crux of the investment philosophy as espoused by Warren Buffett?
The crux of it is to buy wonderful businesses at a reasonable price and to think of the stock market not as the stock market, but to think of it as you're buying a piece of a business. So even if it's one share, you look at it as if you're buying the entire business. It gives you a better picture of what your business and investment is likely to do over a long period of time.
Just to make it relevant to South Africa, here in South Africa we have very liquid markets, very sophisticated capital markets, lots of institutional investors who tend to invest on behalf of ordinary people, ordinary folk who've got pensions at work and so on and so forth. But the vast majority of South Africans really don't have that much in the way of means, not that much surplus cash. We're a highly indebted society. So when people do want something, they have to go to credit and so on. So one of the things that we tend to do in this particular society is that we do depend on active fund managers to go out and invest for us. And your philosophy kind of goes counter to that because of the fees that they charge. So what are your views on that? And do you think that there needs to be a movement towards people trying to find cheaper ways of investing?
Absolutely. My feelings about institutional investors, mutual funds, all of that is they have a very short-term point of view, so they can't think for the long term. For instance, every mutual fund wants to be the #1 fund at the end of the year. So because of that, they can't take a position in a fabulous company and hold it for 10 years, let's say. The retail investor actually has a much better chance at making good investments in this market. And it doesn't take a lot of money, and that's what I'm going to be talking about this Saturday and Sunday at Stanton Convention Center, is explaining to retail investors that you don't need a lot of money to start investing, and here's the fundamentals that you really need to look at. And there's a language, your stockbroker, he only makes money when you're buying or selling stocks.
Yeah.
So you don't want to be buying and selling stocks. You want to buy a great company at the right price. And as you started the introduction, is the magic of compounding.
So how do you know what is the right price? I mean, in those instances where you're having market declines, they talk about market corrections when markets go down by about 10% or so. When do you know as an investor, especially a novice, as to when you should go in? Or they say you shouldn't time the market. What are your views there?
Mr. Market is not timeable. You can't time the market. But for instance, recently there's something called the yield curve, which in a good economy, the yield curve looks kind of like this. And there's some indicators, that being one, that when it starts to invert, which is when it goes like this, it generally suggests that happens right before a recession. So people have been very concerned, and sentiment has been, and the market has been very volatile. As value investors, what we do is we constantly are looking for companies that have been around for a long time and that are going to be around for a long time. And when that correction happens, we can buy it at a discounted price.
And what sort of companies are those? Are those the kind of companies that, because we're human beings and we have certain needs, the companies that tend to feed our needs, are those the type of companies that will last forever beyond the fourth industrial revolution and so on?
Well, certainly consumer goods are great. I mean, I always say, if the stock market closes tomorrow, people are still going to be drinking Coca-Cola. Men's hair are still going to grow on their face and they will have to shave. So there's Gillette, But beyond that, I really one of the philosophies is to try and teach people to invest in what they know. Even I always say the average woman is probably a better investor because typically we buy the household items. We know what detergent we want to buy. And those are great places to look at who owns that detergent. Let me look at the company. Let me learn a little bit about the language of accounting. And that will start your journey.
Very quickly, Mary, because we're running out of time. You just said invest in what you know. Right now, there's a big craze about Bitcoin, cryptocurrency. What's your view on that?
I don't have a very positive view on that, unfortunately, because there's nothing that Bitcoin, it's not going to grow into something. It's only the price that it's determined that determines the price. It's just because someone else wants it. Cryptocurrencies may be around, but it's not something that Warren and I believe in at all.
Okay, super. Mary, we're going to leave it there. Thank you very much for your time and your insights, and good luck with your lecture on the weekend. That was Mary Buffett. She's a financial expert, an entrepreneur. The list goes on. I'm going to cross now to Arabile.
Thank you so much for that, Nompu. Some great insight there, of course, coming through from Mary Buffett. Now, Asian markets largely fell on Thursday as Beijing ratcheted up its rhetoric